but a lot of principles govern the activities of insurance, both in Nigeria and outside the country, globally. There are certain principles that govern their operations, and you can call them rules, you can call them principles. Most times failure to abide by these rules, by these principles, leads to a lot of issues. These principles are the core of insurance. Those are the things that both the insurer and the insured need to abide by. The first principle is utmost good faith. Utmost good faith is like the real Latin word for utmost good faith is uberrimai fidei, which simply says that the insured must disclose all relevant information to the insurer at the inception of any insurance policy. That's simply the meaning. So, be it an individual, be it an organization, at the point of taking any insurance policy, at the point of engaging any insurance company for an insurance policy, the insured needs to disclose all relevant information as regards that policy. And the second one is insurable interest. Insurable interest simply means that the insured must have interest in the subject matter of insurance. What I mean by subject matter of insurance here may be a life, it may be a property. You understand? Because basically in insurance, we have these two basic subdivision of insurance. We have the life insurance and we have the general insurance. General insurance can also be called property insurance, or under general insurance, we have different types of general insurance. We have house insurance, we have motor vehicle insurance, we have goods and transit insurance, we have marine insurance. There's a lot. That's under general insurance. Under life insurance, we also have series of life. Life insurance can even be subdivided into whole life, endowment, some pure risk, all those ones. Life insurance can be subdivided into all that. Now, the particular insurance you want to take determines where you fall, whether you are under property or you are under life. Now, what this insurable interest, the principle of insurable interest simply states that for you to insure anything, you should have interest in that thing. The interest here is not, sorry, I'm receiving a lot of calls. I'm just trying to put my phone upside. So the interest we are talking about here is not that you should like the property or you should like what you want to insure. What we are saying is that you must have financial interest. You must be the owner of what you want to insure. So somebody cannot say, because I like insurance or I want to take an insurance policy, now I want to go and insure somebody else's property. Such a situation, you don't have the insurable interest, and that alone has defeated the principle of insurance. Now, the third one there is indemnity. Indemnity is simply talking about compensation. That is, just like I gave earlier, insurance, that insurance is a pool of risk. That is, many people contribute towards a common risk or common loss. And it's only those who suffer that loss that will be compensated and indemnified. So indemnity is talking about the principle of compensation. To the benefits of insurance to business growth. Now, but we need to understand all this so that we can appreciate the benefits. So that when you're having any engagement with any insurance transaction, any insurance policy, any insurance plan, you already understand the principles. Some of these principles are for the insurance company, while some of them are for the insured. Now, subrogation, which is the fourth one. Subrogation simply says that in an event of loss, if it is a total loss, the insurance company now has the right over the remains. Let's say in a motor vehicle accident. Now, it's like a total loss. The insurance company replaces the car for the insured. But the leftover, the what is left in that motor accident is the insurance company that takes charge of that. That's in a case of a total loss. So subrogation simply says that the insured loses his right over the property that was damaged, having received a full compensation from the insurance company. Just like the example I gave, they've given him a brand new car. So the vehicle that was involved with the accident, insurance company now takes over the scrap. That's what that subrogation is talking about. That's like a nice analogy for that subrogation. Now, contribution simply, which is the fifth one, contribution simply talking about in a situation where more than one insurance company is insuring the same risk. Now, this majorly applies in property insurance. Property insurance, when you're insuring a property, if more than one insurance company is insuring one property, at the time of loss, those insurance companies will share the risk, they will share the loss, they will share a certain percentage to compensate that the insured, which is whether the individual or the company. Now, the reason for that is simply because the purpose of insurance is to bring you back to the position you were before the loss occurred. The main purpose of insurance is not for profit making. Though over the years, insurance has been modified, we now have investments, we now have other things attached to insurance. But the main purpose of insurance is to tackle uncertainties, is to address risk. And definitely, whenever a risk occurs, it brings about losses. And when a loss occurs, the job of insurance is to reinstate the insured. Insured in this case may be an individual, maybe an organization, maybe a business, to return them back to the position they were before the loss occurred. Now, the reason for contribution is, just like I said, it's a situation where a lot of insurance companies are insuring just one property. So at the time of loss, they will also share the loss amongst themselves. So it's not as if the insured will be compensated by insurance company A, it will also be compensated by insurance company B, it will also be compensated by insurance company C by the full value of the loss. But the loss will be shared and it will get compensation from all of them that will now sum up to make 100%. The whole idea is to bring the person back to the position he was before the loss occurred. So basically, that's the principle of subrogation. Now, and the last one there is proximate cause. Now, proximate cause simply talks about in a situation of loss, all these principles are geared towards how to handle a loss when it occurs. You understand? While the first one is talking about disclosing all material facts at the point of at the beginning of the policy. Now, proximate cause, which is the last one, simply states that if any loss occurs, now the loss that occurred is an event. What was the proximate cause? What was the root cause of that loss that occurred? So the reason for that is for us to ascertain, for the insurance company to ascertain, okay, who was really at fault in this case? Now, the insured is covered, but the proximate cause is about reducing negligence of people. So once they now find out the root cause of the matter, that's when they will now know, okay, is the actual person who caused this loss, is the person insured? Does the person have any insurance company around this? So they can now get compensation from that insurance company whose insured is the root cause of a loss. So that's the principle of proximate cause. So these are the basic principles, though There are a lot of things to talk about each principle, but because of time, I just need to summarize like that. But those are the basic understanding of all those principles. So these six principles are the principles that guide all insurance activities. So it's very good for individuals, business people to understand these principles so that they will avoid stories when it is time for their claim. There will be no room. There will be no room for any insurance because as we speak now, the insurance industry is so regulated that claims payment is part of what adds to the credibility of a particular insurance company. So insurance companies don't want to have any reason not to pay claims. That's why we enlighten insureds, that is individuals and companies from time to time, so that they can know these principles, so that they will not knowingly or unknowingly breach this, go against these rules, so that nothing will prevent their full compensation. So